where you said that March results. In fact, I feel especially the March month results of certain industries are actually showing very rosy. Reason is because of the stock profit. A lot of industries are planned, So see, very long-term projects will come up anyway. Like steel, it takes about 2 to 3 years to set up. Point is that they'll be delayed. Total FPI investment in NSE, listed companies, is the lowest in 17 years. See, the tie-up funds is possible, but today, if you do a projection, you have to assume a much higher cost of your capital, whether it's equity or a debt. That's the point. Look, the people, how they put, ECVs, that's a loan in our country. There is something called withholding tax. Like that withholding tax is taken by the government. So cost goes up. Number two, on the ease of doing business, is it the right time to do something? We're still number 63 in that. The capital gains for rates, especially for those investors, foreign investors, even if it is differential for the Indian investor, let's do that.
Hi, this is Pratim Bose, and you are watching Podcast with Pratim. I have with me Subhendu Moitra, investment banker. Subhendu, welcome. Subhendu, so we will discuss Indian economy today, and I think we are discussing it less. It's time we discuss more about the Indian economy. Subhendu, how is the scene that you are watching? A lot of things. Today's newspaper says Q4 earnings may grow, but I think Q4 means March, right, up to March. So that would be more or less protected because we also saw a report that the margins, corporate margins, are at its best. That said, the real problem has begun after that. Mostly the effects will come after that because before March, though, they will have their inventories ready and everything. So they won't face the much of the cost push impact. But after that, there are loads of issues. So one of the issue I would love to know as we progress is how the industry is affected because uncertainty grips. You saw that oil prices are raised 4 times in barely 10 days. So there is no rule, therefore, and it is increasing very. I mean, you think of a trucker. By the time he starts off from, say, Delhi or Mumbai or wherever to, say, Calcutta, right? In between, prices have increased twice. So how will he manage his costs? So I think that is a big problem. So the basic thing is that to what extent we just saw the green shoots coming up in the economy in terms of capex. We saw the recent announcement by Jindal in steel plant in Odisha, integrated steel plant. So how are these affected? You are the person who will know what is happening where. Over to you.
Yeah, actually, just to start with, where you said that March results. In fact, I feel especially the March month results of certain industries are actually showing very rosy. Reason is because of the stock profit. For example, a petrochemical or a oil industry, say they purchase the stock, and that stock is over when valued. At the end of the year, it's actually there's a lot of profit there. So that is showing. So we have to see that part also. And you are very right. Subsequently, the problem started, and given the problem, especially the input problem, the raw material and the forex, whatever is our rupee depreciation, that is actually affecting us very badly. So far, I think we always used to be very positive earlier, but situation right now needs some very drastic actions, we believe. Otherwise, it's affecting us as a country, economy. It's a very bad way. For example, you see last year, we saw the trade deficit merchandise, 333 billion. You can see substantially going up this year. That's one of the points I get. Inflation is already gone up. And so inflation will go up further. Inflation is gone up. In fact, WPI is about 8% last month, and the other one is around 4%. And it
3.5%. 3.5%. That's in April.
3.5%, and food is around 4%. So that will go substantially up.
But these are all because of I mean, they are not showing the real picture. We know that in last 1 month, prices have increased
Much
dramatically.
more, much more actually. So basically, what I'm saying, and these are all affecting the input cost, and as you rightly said, a lot of industries are planned. So see, very long term projects will come up anyway. Like steel, it takes about 2 to 3 years to set up. Point is that they'll be delayed. Absolutely, they will be delayed for a simple reason. The capital cost is going to go up. Interest cost today, the government has to, after some time, RBI has to take a view, and they have to increase maybe rate of interest. They have to, sacrifice growth to some extent, given that if the inflation goes up like this. So with that, I think what will happen, the cost of the debt will go up. Share market is absolutely down. Last year, I'm telling till March, 1,80,000 crore has been taken out from the share market by FPIs. That's the amount. Last year,
Roughly 20 billion.
roughly 20 billion. So this year, I'm sure it's again going out of it, because we need to see certain actions there. We can discuss that. What I feel that what actions government should take instead of just going ahead with the current plan, need some drastic action. Look at the FDI. Last year's FDI, net FDI is 7.6 billion. If you just see the inflow of FDI was record 97 billion or something. But look at the outflow. I think about 33 billion, 54 billion is something which has been taken out from the industries by those investors, earlier investors. So that FDI has been taken out. 33 billion is outbound FDI by Indians. So that will anyway, I'm not discouraging that, because outbound investment has its own benefits also in a long term. So we have to see that.
Value chain creation.
Value creation, and you need to have outside assets also. So that's okay. But I'm saying that total FDI, because of the market, certain investors are losing.
This is to some extent, we are seeing this huge outflow. Once again, for the benefit of viewers, outflow is not bad. Indians going out and buying businesses means you are acquiring technology, you are acquiring markets. So don't criticize that. But we are probably seeing such a rush after the last time we saw was in around 2012-13, that period.
Yes.
Okay. So
and also let me also add.
And that time also oil prices were shooting.
Yes. And see, I also add, NSE, if you do analyze today, analyze that total FPI investment in NSE, listed companies, is the lowest in 17 years, somewhere around 15.8%. It's the lowest in 17 years. So it seems that certain investors are losing interest in our market. So what have we done wrongly, or what we need to do in a different way when we attract them back? That's very important. Otherwise, the rupee is going to depreciate further, which is, some people said, oh, you allow it to depreciate. So it's not that easy. Okay, you allow it to depreciate, you export. That's one part of it, but there's a lot of other negative. We import, and we are a merchandise.
We are a trade deficit nation.
Trade deficit nation. We cannot allow this. I found some of the economists say, oh, you allow it, but
no.
I don't understand.
One thing is, to my understanding is, it is a bad idea to try to keep the rate stable, because that is going to drain you out.
That's right. Rate stable by you reducing your FDI.
The other thing is, what they are saying is that it is acting as a natural barrier to consumption. So why do we increase the interest rates to check consumption and inflation, right?
Our forex reserves have come down, so maybe they are targeting 710 to some 680 billion. So that's why they are saying.
In any case, that's very comfortable.
That's still very comfortable. That's what I'm saying. So I think we need to now find what we should do as a nation, not a short-term thing. Okay, of course we should ask people to reduce forex expenditure. That's fine. But what more we should do, or what if something we have done maybe not right, which people are not liking it? Because see, this you have to find that it is not always national. These foreign investors have options across the globe. So they are not in love with you unless you come with some good value. So we need to see that, and we can discuss that also. If you want, we can discuss those parts. What should be the actions required by the policymakers, by the government.
Subhendu, I will come back to this investment scenario, but before that, when we are, the one of the prime reasons why we could tide over the COVID and all other, the over the last 5, 6 years, one distinction between us and China, China suffered a serious decline in consumer sentiments, right? People were simply not buying, but Indians were buying and buying, but of late, the buying had just picked up when the car sales and etc. started moving up, right? So with this uncertainty, with this interest rate hike that you were talking about, even if the interest rate hike doesn't come up, so I was just asking the fellow who paints my over here offers the painting jobs. So I was asking him to do some small painting jobs, and whatever something took me around 4,000 or so 5 years back. I don't know the prices that were before February, but he was now asking at least 50 to 60% more price, right? So, which essentially the point I'm trying to come at is that the consumption will be affected, right?
And
So
also the monsoon is not supposed to be good, so that will further affect the consumption.
Right, that's a double whammy.
Yeah, so
That's a double whammy because it is the rural consumption that gives us the lead. So, and in the car sales also, it was the rural buyers who were buying the cars.
Car, two-wheelers. But so that's what I'm saying. No, this time we just cannot say, no, we have a huge domestic demand. So that may also not help us.
The immediate, say, FMCG sector should be affected surely. FMCG and probably some consumer segment, including some of the durables sales, because the prices have gone up substantially. So these will be affected. But over to the issue of investment. Now, there are two school of thoughts to it. One, classically, this is the time to invest, right? Because I was just about to ask you that since there is a definite possibility of rates to go up, so is it time, or whether you are seeing that kind of a in the market, rush in the market to tie up funds immediately? Is there any rush in the market to tie up funds?
See, the tie-up funds is possible, but today, if you do a projection, you have to assume a much higher cost of your capital, whether it's equity or a debt. That's the point. And immediately your returns comes down. I mean, your whatever is your net return comes down. So you have to see that part also. Now, if you consider
even if you know that a year later or 2 years later, things will be better off, but when you are doing
not only that, but see, today's, especially it's a global economy. So, we can't see that, well, this is an investor. Let's take out the smaller one. I'm saying large investment. You cannot say that the investor is only looking at India. So what are the other options to him for the money to invest? Is it that they have to anyway set up industry in India?
No.
Or he can do something else in some other place, or put his cash, or put his money in some funds, or put his money in Dubai. There are options, I'm saying. So, with whatever cost. But I'm saying that today, if I do assumption, but still I should do it. If I believe that there will be a further coming up.
And it is also not a fact that India is the best place for manufacturing.
Exactly, because what I'm saying today, not only best place, which I was coming to the point, you see, today, why this FDI and FPIs have a problem? One, though, of course, it is, global economy, this, that. Look what we have done to the taxes. How they are taxed in other, markets, similar markets, Hong Kong and all. People who are investing in the share market, how they are taxed and how they are taxed, like short-term capital gain, long-term capital gain, this percent, that percent. Look the people, how they put, ECVs, that's a loan in our country. There is something called withholding tax. Like that withholding tax is taken by the government. So cost goes up. So, these kind of things, I mean, if now today, suppose I tell you that take the capital gains tax out of the foreign capital. Immediately people will jump, oh, you are giving some better benefit. But question is not that. Question is that guy is looking at India and as along with other countries, what they are doing and what you are doing. And if you really need capital from them, what you should do. These are the thing. You have to do a very see. You remember when we discussed their government in 24, I think budget, they increased the capital gains or they structured the capital. We appreciated that because share market was very good, doing very good at that. They were at the high. So today, I think again we have to think that whether we should do some kind of tweaking in that. It's required because we need money from them, and for make it attractive,
to put it differently, when the rupee slides, so the foreign investors' returns are actually reducing.
Exactly. Right? And because so, you are taking his tax in rupee terms, no?
Right.
It's further getting reduced.
So we have to create space for him. We have to give him some more
space for him. You need him. We need them. You have to understand there's nothing like nationalistic or something. As I'm saying, NSE listed shares, I mean, for the shares, the FPI is the lowest in 17 years. So what we have, so that's what I'm saying. We need to relook on
you're talking about PE.
No, I'm FPI. Saying total foreign investment, foreign holding, all NSE listed shares today, FPI holding, is at the lowest in last 17 years. That is 15.8%. I mean, what is the FPI holding in, say, if I take all shares which are listed in NSE, and what is the FPI holding? It comes something around 15.8%. I think this is one of the lowest in last 17 years. So these are the things that are giving an indication that we need to do something drastic. That's number one. Number two, on the ease of doing business, is it the right time to do something? We're still number 63 in that. So is there some more thing we can do? Why a venture capitalist, if he has to put a venture capital money here or VC here, he has to come from Singapore. Why not Gift City? Or can we make another? I'm just a very drastic one. I'm sitting in Calcutta. Excuse me. Whether we can have another Gift City kind of structure in eastern part of the country, in Calcutta, especially for the eastern side of investors like Singapore and all. So these are the things I think government need to think in a.
So we are in the end part of the discussion. So now here, give me the suggestions.
Yeah. So these are the suggestions we are giving.
I'm very sorry that I was disappointed that the finance minister has come up after so much of everyone knew that there is a problem. She came out and said, well, these are the Hormuz Strait is a problem, and that is a problem. Fertilizer is a problem. So we all know where the problem is. You give us the solutions, right?
I'm sure the government is working on it. To be fair to her, what she could do, because that's not in her area also. But I'm saying there also in energy security. That is where I think what we could understand under this. That's
energy security. Energy security. The government has been working from next year. UAE suppliers will bypass Hormuz and etc.
So that's what I'm saying. They can make three terms, but short term, long term, and medium.
Right. So what are the immediate goals that the government should
do? Goals, I think they should look for new sources. They're looking new sources for short term. On mid term,
not energy for overall. Energy, though, see, you cannot go on very much on short term.
Yeah. So medium term is what you were saying, that UAE new routes and all, and long term again going to hydrogen.
You need gas.
Long term is actually hydrogen and those things. So this is how it is. You don't have beyond some point. You cannot do that. I agree. I think the first thing they should target is to bring the outside capital as far as possible, because that's actually that's what we were suggesting. Foreign capital. That's what I was suggesting. Those things.
What are the suggestions?
So my suggestion is to tweak the capital gains for rates, especially for those investors, foreign investors, even if it is differential for the Indian investor. Let's do that, viewing the situation like that. Also, my suggestion is to look for.
So you want a reduction in capital gains?
I mean, some reduction is required. Capital gains and also withholding tax on the foreign, financial institution loan to, which is called external commercial borrowing. So that will reduce the cost of the debt also. So it will be more affordable for Indian companies to take foreign currency. So this is the very basic thing which is required to bring this capital, both types of capital.
Immediately, for immediate improvement in sentiments.
Yes, yes. And I'm sure you will immediately see a jump in the share market. And people will come, a lot of investors will come. So those are the things can be thought of. I mean,
because
of course,
if we don't address the share market, then very soon there will be a panic in the
there'll be a
market.
panic, and
And
again for our currency will may depreciate further.
no, I'm not. Currency is another part, but let us check the facts. The COVID and etc. could not ruin our share market because of the domestic investors,
Right.
So, and they are heavily into mutual funds. So, the moment the situation that is emerging, and these, let us understand one thing: these bunch of investors, most of them have not seen a bear run.
Exactly. They have not seen. They are seeing for first time.
For the
They are
first
seeing
time.
the first time. Yeah.
So,
like you and I have seen, and we have burnt our hands. I don't know how many times, but they are doing it for the first time in life.
right.
So that's the point. So we need to actually do that to boost those. There are others who said, I mean, take the share market out, but you cannot take it. Especially as I say, if somebody has to do
So
a
if they
capital investment,
panic and the money flow reduces, there will be a bigger fall in the market.
and also we need, if the investment has to do with capital investment in the country by the Indian promoters, so they will do it. They right now, even they plan that they will do it slower. They will wait for 1 year to
So
things to
what
settle.
can we do? Last question. What are the ECB is one part you said,
Yeah.
right? Do you have any concrete suggestion where we can create a SPV, I mean, create a window for the investors who were who were planning capital expenditure to help them? Is there any such possibility? Can we create any such window?
I mean, that window, one thing is being planned, but I don't actually suggest that. I don't suggest too much intervention by the government by doing some subsidy beyond a point. Some people, I'll tell you what they are saying. They are saying they let the government take the hedging risk. I'm not in that much favor of it. Or to make a sinking fund, RBI make a sinking fund. These are the questions we're being discussed. So there is a limitations for the government project, yes, but for the private projects, letting
Basically, these are like interest subsidies.
interest subsidy, so we can do to a point, but I don't think the user should take the full edge cost and all. I don't appreciate, but I think what they should incentivize outside investment to come as much as possible. For that, if they have to lose taxes, let them lose this, let them make money in some other way. Because see that you look at the situation, if you feel you are losing taxes this way, at the same time, because of the depreciation of the rupee, you are paying more for your imports, especially for the
The
oil.
big problem, it's a major problem. See, we could handle previous falls or the global turmoil that was going on for last many years by boosting our domestic consumption
Exactly.
through the infrastructure building, right?
Exactly.
But right now the problem is multifaceted. Even the infrastructure cost will go up.
Infrastructure cost will go up, and infrastructure, I think the investment, whatever targeted by the government, they should not compromise on that. So
And the
if
biggest, you
that
were
makes,
talking about interest subsidy and etc. I mean, how will the government give? I mean, look at
so
the
if
problem with the PLI scheme.
I know you are economists, you will immediately jump on me. So if that means this year not reaching the target of the fiscal deficit to some extent, let it be that way. This year,
Yeah,
maybe we can.
I think the wider fiscal deficit is a writing on the wall.
Exactly.
You are not
So
going
I
to,
think
you
let's
cannot avoid
appreciate
that.
that. Let's appreciate that there will be some fiscal deficits and all.
We
And
had to accept it
we have to accept
during
that.
COVID.
So because I've seen the normal economic guys immediately jump on. I mean, how are saying
No,
we
no,
are
no,
doing
no,
this,
no, no. If you do that,
but this is a very different time. This is a very different time.
this is a completely different scenario.
Absolutely.
This is not, we cannot just live on the same medicine as we did in the
Yes,
past.
exactly. That's what is my thing. It may
Right.
require more borrowing by the government.
I do actually appreciate your suggestion because I believe the immediate task for the government, long term, whatever you do, fine. But as I say, in the long term, we all are dead.
Yes.
So, so that's fine. But we all know that the Middle East problem should not survive in the long run, right?
No, I have a different view on that. I have a different view on that. Even it solves the kind of mess that has been created. It's going to hurt us. You don't know. It may come in interim some way or the other. So you have to live with that maybe for some time. This is my view on that.
So, no, I understand what you're saying. The basic problem is that the way, see, the problem is not invented by India.
Exactly.
We were buying
We are the
gas.
sufferers.
We are sufferers.
Absolutely.
We were buying gas from Middle East, and suddenly you see this flare up. We were buying gas from Middle East because it is cheap. Now we have to graduate to a situation where we will buy gas from. We have now started buying gas from USA. Now the point is that from USA it is hurting you. Simple. So we have to graduate to a situation where you will hedge on these geopolitical uncertainties. So you will have a basket of gas from Russia or this or that, so that you can. But the other side of the story is that the average cost of India basket will go up, right?
Yeah, of course.
So I believe one basic outcome is the days of low energy cost are over.
Yeah.
And probably we must work on coal much more. That is a domestic reserve.
Coal you should work more.
I'm very disappointed that the government has been talking about coal gasification and coal-based fertilizer projects for last 5-6 years, right?
Yeah.
Now only they have once again come up.
No, because there is a huge lobby inside which opposes that. I mean, maybe or international lobbies who tell, oh, coal is so bad. While all the advanced countries who used to preach us, they are doing themselves, like Germany, US. Who are we to that? We have the largest amount of the reserves of coal here.
That is it. These people are scams. I'm sorry. So there was a time when they kept on selling us that anti-coal things. Later, when the COVID came, and after that, particularly the Ukraine crisis came, they opened their coal plants.
Absolutely.
So these are, I mean, we cannot just follow them. Anyway, so I really appreciate your short-term suggestions, because that is going to improve the sentiments immediately, which is very required. Otherwise, I'm foreseeing a situation where the domestic investors will start pulling out, and that will be a disaster.
Absolutely.
Thank you very much, Subhendu.
Thank you.